Let's turn now to the day's business news and how the markets have been reacting to the political turmoil in London. Our business editor, Stephen Carroll, is here with more. Stephen.
Eve, we're looking at another slump for sterling. In the past hour, the pound has fallen to its lowest level against the dollar in 3 years. The pound sterling is the lightning rod for all things Brexit, and this latest chasm of uncertainty has again driven its value down. So far today, we've seen the pound fall through 2 floors. The first was the $1.20 mark. That was the lowest since 2017, but it's continued to fall since to a level last seen in October of 2016, just under that $1.20 mark, against the euro trading down as well at €1.10, just under that 110 mark. Let's put that in context for you and take a look at how sterling has been performing against the dollar over the past 6 months. The general rule has been on every occasion that a no-deal Brexit became more likely, we saw the pound weaken. Early in August, we had a steep plunge. We've now gone below that level, back to that October 2016 floor. So, what would a snap election, if that's what the result of this latest political wranglings mean? What would that mean for the currency? We've been asking Elsa Lignos from RBC Capital Markets about this.
Feeling for what they think is positive or negative. And again, just discussing it with clients and our traders earlier today, some argue it's uncertainty and markets don't like uncertainty. And some others, and myself included in this, say, well, actually, no-deal Brexit is kind of the worst-case scenario for sterling. We know that's a possibility. A snap election might actually open the way to some more sterling positive outcomes. So I'm not that certain it would be as negative as some out there fear.
Well, that's the currency markets. Let's check in on how the stock markets are trading for you today. London's FTSE 100 rising at the open. That's following a trend we've seen constantly over the past few years with sterling. As sterling goes down, the FTSE tends to go up, and that's because the companies listed on that index mostly export, so a weaker currency is good for them. And as you can see, that's out of step with what we're seeing across the rest of the European markets, falls in Paris and Frankfurt as well. There are some shares in London, though, that are suffering as a result of this. The low-cost airline EasyJet is one of them, their shares opening down 2%. In Asia, Brexit playing into the minds of investors there as well, but the US-China trade war, of course, a big factor there too. We did have the Nikkei in Tokyo close flat, the Shanghai Composite seeing some small gains but falls in Hong Kong and on the Kospi in Seoul. Turning next to Argentina, the value of the peso appears to be stabilising after the government introduced capital controls aimed at stopping it plunging off a cliff. Now, to give you an idea of what that means, on the 3rd of June, a dollar would have bought you just under 45 pesos. Today, it will buy at least 56. That's at least according to the official rate. The black market rate could be much higher. The finance minister and central bank governor have been trying to calm the markets about taking this drastic step of imposing these capital controls, as Lauren Breschdecker now reports.
Defending the latest currency controls, Argentina's finance minister gave more assurances that the government-imposed restrictions would not affect people's ability to access their savings.
Everyone can do what they want with what they already have in the bank, in their homes and abroad. That is untouchable and unquestionable.
The currency controls were imposed Sunday in an effort to stabilize the country's deepening financial crisis, which has seen the peso lose over a fifth of its value since early August. The measures require Argentina's central bank to limit dollar sales, forcing companies and banks to obtain authorization to purchase cash from abroad, and setting a $10,000 a month cap for individuals seeking to buy U.S. currency. The central bank said this would only affect 2% of people who buy dollars, yet massive lines still formed outside banks on Monday, as Argentinians recalled the 2001 crisis, in which they were blocked from withdrawing money.
These are desperate measures, absolutely desperate, that will have the opposite effect. People remember 2001, that there may be a confiscation of deposits, that dollars can be converted into pesos, that anything can happen.
Economists have warned the full effects of the currency controls could only be measured after U.S. markets reopened on Tuesday, following the Labor Day holiday.
And of course, we'll be keeping a close eye on what's happening on the markets for you throughout the day. Eve.
Thanks a lot, Stephen, for that business update. Stephen Carroll with us there.